Okay, great. I see the messages coming in. Thank you guys for confirming. Uh, I'm going to get started here. We are expecting somewhat of a large audience here. It doesn't look like everyone's on that has registered. So I'll get started with just some of the basics, and then I'll get a little bit deeper into the meat of the subject in just a few moments. So essentially what I want to talk about today are the two programs that the SBA just recently released. It's the Economic Injury Disaster Loan and the Paycheck Protection Program. A lot of you may have already heard about them. Some of you may have already applied, but the point of this webcast is going to be to get really into the details of the programs and how you can successfully get your application through. Nothing is certain right now, so everything that I'm going to be saying is going to be based on experience, based on research. I've been studying the programs ever since they were released, so I do feel like I have quite a bit of knowledge about the programs, but there is still a lot of uncertainty. So the goal today is to just try to get as much information to you as possible so you can have the best success in getting approved for these programs. Let me start kind of with how the format of this is going to be. If you can see the screen, you can see my picture up in the top left corner. I do have slides that I've prepared, so if you're a visual person, you are more than welcome to use the slides as a guideline to take your notes. Again, this webcast is on Facebook Live. If you're watching this right now through our website, you will have to click through and get onto the Facebook page in order to post comments and questions. The comments and questions, I'll get to them at the end of the presentation, but I do have my associate Herber who is moderating the comments, and if it's something that he can respond quickly and answer, he'll do so in the comments, so just keep an eye out over there. And then I think the general questions that are going to be helpful to the majority of people, those are the ones that I'll answer as part of the webcast. Okay, wonderful. And I'm seeing the messages come in that people are on here. Great. Thanks, Yvonne. Daniel, I see you. Alan, Patricia, thank you guys. All right, I think we're still not at full capacity. Dan, thank you. Oh, okay, Dan just mentioned that he had to enter full screen mode in order to see the comment section. So if that's helpful for anyone else, full screen mode should help you see the comment section if you don't right now. All right, let me get to my slides and get started here. So this all started, this webcast actually all started when these programs initially came out. There was a lot of information coming in. A lot of clients were reaching out to me and asking about the programs. I had friends reaching out, family reaching out. I ended up having a very successful Zoom call with several of my friends. And I realized that instead of having one-on-one phone conversations with probably hundreds of clients and friends and family, that it would be much easier to just do a live webcast and present to as many people as once. So as something that started to be something just specifically for clients, ended up opening up to just anyone in general that can benefit from watching this. Since it is a live webcast and it is on Facebook Live, we thought the more the merrier. Whoever can benefit from it, please take advantage of it. So those of you who don't know me, my name is Alan Mehdiani. I am a CPA. I am the founder and CEO of Mehdiani Financial Management. We are essentially an accounting firm that focuses on tax. We specialize in working with small to mid-sized businesses and individuals. And so, the reason for us getting so involved in this program is because I think it is something that's beneficial to so many of our clients that we didn't want to just look past it. So, okay, let's get started. What is the CARES Act? The CARES Act is a bill that was just recently passed by the government as a response to the coronavirus. So many individuals and businesses were impacted financially that they came out with several stimulus bill options to help both individuals and small business owners. So the focus of today is going to just be talking about the programs that are specific to small business owners and independent contractors. So if you are a business owner or you're an independent contractor who receives a 1099, this webcast is for you. For those of you that are just individual W-2 employees, you may not find as much information that'll be beneficial on this webcast. But if you know anyone or your employer might benefit from this, it's definitely something you can watch and relay the information about. So let me get started here. So the topic of today's presentation, first I'll do like an overview of the two programs, the Payroll Protection Program and the Economic Injury Development Loans. We'll get into very detailed specifics about both of them, but some of the things that I'll cover is, are you eligible and how do you apply? How much do you qualify for? How do you get the loans forgiven? Which programs should you apply for? And potentially if unemployment is a good option for you. So if these programs are not the best option, or maybe doing a combination of unemployment and maybe one of the programs would be best for you, I'll get into that as well. So another thing that I want to mention is these programs have an element of either forgivable loans or grants, meaning money that your business can receive and doesn't have to pay back. That's going to be the primary focus of what I discuss. There is an element in the economic injury development loan where you can get money above and beyond the forgivable element to just use as funding for your business. And so I'll talk about that. I'm not going to get into too much detail, but I will discuss it during the presentation. If you have more, if you need more information after, you can reach out to me and I'll be happy to help you. So I did talk about myself. That's me. Our website is Mehdiani.com. So if you are not a client, want more information, please feel free to visit and get in touch with us. As I mentioned, Herber, he is on our Facebook page right now, moderating the comments. So he'll be the one answering questions. If you have any during the presentation, anything pops up that you want to ask, feel free to do so. If you miss anything, if I go over something too quickly, you can also leave a comment there. Herber's moderating. He can also ping me if need be to tell me to go back and either repeat something, or if something's not clear, I can elaborate. All right, so let's first go over what these two programs are. So the Paycheck Protection Program is short, they call it the PPP, and the Economic Injury Disaster Loan is referred to as the EIDL. And so let's talk about the Paycheck Protection Program real quick. This program is given to you as in the form of a loan, and the way that it's calculated is based on payroll costs, and if you're self-employed, based on your business net profit. The way it's calculated is you take your average monthly payroll costs, multiply it by 2.5, and that's the total amount of loan that you can receive that can essentially be a forgiven loan, okay? I'll get into details of how it's forgiven, but the key here is the entire amount that you can receive is 2.5 times average monthly payroll, and the full amount can be forgiven, meaning you don't have to pay it back. If for whatever reason you are not able to have it forgiven, and I'll go over the criteria later, it is going to be at a 1% annual interest rate, and you can have a total term of 2 years to pay the loan back. The EIDL has essentially two components to it. So the EIDL, it is also a loan, but there is a $10,000 loan advance that businesses can qualify for. The $10,000 loan advance does not have to be repaid if it's taken out for appropriate purposes. And that's basically to cover payroll, business expenses. It could be accounts payable, fixed debts, utilities, so forth and so on. The second element of it is the regular part of the loan. The regular part of the loan can be up to $2 million for businesses that are for profit. The interest rate is 3.75%, and you can have terms up to 30 years to repay it. So again, two components to the EIDL. $10,000, basically they call it a loan advance, which is essentially a grant because you don't have to pay it back. And then the second element is a loan of up to $2 million based on your qualification. So there is going to be an underwriter looking at it and determining what your business qualifies for based on several factors. It could be based on revenue, expenses, so forth and so on. But it does have pretty favorable terms in the sense that there are no fees, and the interest rate at 3.75 is pretty decent. All right, let me move on to get into some of the details. I want to talk about the EIDL first. So who's eligible for the EIDL? Essentially, all small business owners in all US states are eligible to apply. The program, they call it for small business owners because you have to have less than 500 employees to qualify. There are certain businesses that can have over 500 employees. I'm not going to get into them because the primary focus of our business is working with those small to mid-sized businesses who have 500 employees or less. If you have more questions about, your business does have over 500 employees and you want to see if you still qualify, get in touch with us and we'll let you know. But for the purpose of this conversation, we're going to be talking about businesses that have less than 500 employees. So if you have less than 500 employees, or you're an independent contractor, self-employed, who doesn't have any employees, you may qualify for the EIDL. When can you apply? So the applications are open. It's through the SBA. So the EIDL is directly through the Small Business Administration. The applications are on their website. You can apply direct. It's a relatively simple application. They don't ask for too much information up front. You do need some information though. So one of the questions they ask is about your gross revenue and cost of goods sold. There is no need to provide backup documentation with the initial application. But at this point, we don't know if the SBA is going to be following up and asking for supporting documentation. It's unknown at the moment. I have not heard of anyone being reached out to quite yet. I know that the day that the application went live, we had several people apply. Our firm applied itself. I still have not heard back. The bill did say that funding was going to be made available 3 days after you submitted your loan application. It's been well past 3 days. Haven't heard anything yet. I think later they came out and said 3 days after your loan has been approved. So at this stage, we don't know the timing of when loans are actually going to get processed and when the funding is going to be made available. But I do encourage everyone to apply immediately because I do believe it's going to be on a first come, first served basis. And there is a cap to how much funding is available. So, if you haven't applied and you feel like you may qualify, I think you should take advantage as soon as possible. Like I said, the loan is available through the SBA website. If you need assistance in preparing the application, our firm is offering a service to help file the application for you for a flat fee. Again, it's not required. You can do it on your own, but we are offering the service if you'd like us to. Okay, so how much? We talked about this. You can get up to a $2 million loan. The $10,000 will be a loan advance that will be essentially a grant that you don't have to pay back. What I believe is going to happen is once you submit an application, that 3-day funding that I just went over, that is meant to be for the loan advance. So the $10,000 is what they're trying to send out relatively quickly. That's something that I think is going to require little to no documentation. I think if you are self-certifying that you qualify, you should get the funding without providing too much more information. Now, in terms of how much of the 10,000 you're going to get, the verbiage right now says that you may qualify for up to $10,000. The SBA website and the bill do not have specifics on how they're calculating that. I have seen through some sources that they may calculate it based on the number of employees. I read on a couple of different sources that it's going to be $1,000 per employee. I don't know if that's true or valid, especially because self-employed individuals that have no employees also qualify to apply for this loan. And so I don't know how they're going to calculate it for self-employed individuals. They may just count a self-employed individual as one person and do $1,000. So at this point we don't know, but again, I do encourage everyone that qualifies to apply because we're talking about money that does not need to be repaid. So how are the loans forgiven? The $10,000 loan doesn't need to be repaid. You just have to certify that you are going to use it for certain qualified expenses. Essentially, most business expenses will qualify for this one. This one doesn't need to be specifically for payroll, which is what the Paycheck Protection Program is for, and I'll get into that next. But this one is not specific to payroll. Now, if you do decide you want to move forward and also take the $2 million or up to $2 million loan, I do believe that's going to be a process that's going to take a little bit longer than the loan advance process. Like I said, I think there's going to be an underwriter involved in determining how much you'll qualify for up to $2 million. They're also going to determine what your payment period can be. It can be up to 30 years. And based on initial guidance, it's going to be 3.75% for businesses and 2.75% interest rate for nonprofits. Okay, so let's get into the inside scoop. How do you apply? We went over that. You do it through the SBA website. What information is requested? So part of the application process is basically you self-certifying that the information you're providing is accurate and true. We do encourage everyone, obviously, to be honest because although there is no enforcement at the moment, I do believe at some point they are going to task an enforcement team to make sure that people are not taking advantage, only because it sounds like at this stage it's very easy for people to take advantage of it. One of the pieces of information that they are requesting is either an EIN for a business, so an employer identification number, or if you're self-employed and you don't have an EIN, to use your social security number. Now, we talked about also when you get your funds, it's supposed to be 3 days after either the loan application is submitted or after they accept it. So one of the things that we're doing to get our information is we're using other resources. So there's a group of accounts that are crowdsourcing information. So a lot of the information that I have is from other accountants. One accountant told me that he himself had applied and he received an email from the SBA in order to accept his $10,000 advance. Okay, he mentioned to me that I think he mentioned that it went into his spam folder. So if you've already applied, please regularly monitor your spam folder to make sure that it doesn't go into your spam, because I do believe that there is a process where you need to accept the funds once they've approved you. My broadcast may have stopped streaming. Okay, reconnection successful. So I think I should be good to go. Herbert, if there are any issues, would you please ping me? All right, moving on. Okay, it says reconnection successful. Are we still live? Okay, seems like my disconnect may have just been a glitch. All right, so let me continue on then. Okay, so the Paycheck Protection Program. Uh, so this one is also directed to small businesses, so 500 employees or less. Again, there are certain criteria set for businesses that have over 500 employees that still may be able to apply for it. Specifically, this is for the accommodation and food service industries. But again, I'm not going to focus on those because those are not the types of clients we usually work with. And again, sole proprietors and independent contractors may also apply for this. Okay, when can you apply? So the PPP is the one that's a little bit more complicated. I'm going to spend a little bit more time on this one only because it's not directly through the SBA and it is live in terms of being able to apply. So for small business owners that have employees, the go live date for this program was April 3rd. For self-employed individuals and independent contractors that don't have employees, the go live date is actually today, April 10th. And so the program is going to be open all the way up until June 30th. So you can apply now, and you must take the loans before June 30th in order to qualify. So this program is the one that's based on your average monthly payroll costs, okay, with a cap of $10 million. So again, I think for the purpose of this conversation, sorry, I just got a message. I think we should elaborate on how the loan would be calculated for the PPP for independent. Okay, got it. Yes, I'll talk about that. So the payroll costs are going to be calculated for small businesses based on their average monthly payroll, which is going to include wages, commissions, salaries, sick leave, vacation pay. It will also include health benefits if your company is providing them, and that's the employer paid portion, plus any retirement account contributions that are employer made. So all of those are going to be included in the average monthly payroll cost calculation. For self-employed individuals and independent contractors that don't have payroll, it's going to be based on net income for the year. So whatever your net profits are for your business, so revenue minus your expenses, whatever's left for a 12-month period is going to be averaged out, dividing it by 12 so that you can get your average cost, and that's going to be used to calculate your average monthly payroll cost. You multiply that number by 2.5, and that's the amount that you should qualify for. Okay. Now, the program for the PPP is a little bit more specific on what eligible expenses are. These expenses, so this program, it's called the Paycheck Protection Program, right? The idea for this program was to essentially help businesses keep employees on payroll. The idea was, too many people are being laid off. Let's give business owners money to keep their employees on payroll. And as long as the employers are using these funds to keep people on payroll, they can apply for forgiveness. Okay. Oh, let me also mention one other item that I forgot to add. So the monthly payroll cost does not include the FICA taxes, so the federal taxes that the employer pays, like Social Security and Medicare. Those are not included in the calculation when you're trying to figure out your average monthly payroll cost. However, state and local taxes are included. So if you're in the state of California, which I'm assuming most of the viewers are, you can include California unemployment and California ETT, employment training tax. Those two may be included in the calculation, but FICA taxes cannot be included. All right, so how to use the funds. So essentially, you have to use at least 75% of the funds that you receive through this program to maintain your payroll. 75% has to be used for the payroll costs. 25% can be used for other items like interest payment on mortgage for business property, rent, and utilities. The other thing is that for the 8-week period after you get the loan, you have to, one, maintain the same number of full-time employees as you had prior to the date of disaster. So essentially before all of this happened, whatever number of employees you had, you need to maintain that number. And if you've already let people go prior to this bill, you need to have them rehired before June 30th. One other key, and I apologize, I may be a little bit scatterbrained about this whole topic. This is the first time that I'm doing a full-on presentation, and really all this information is brand new. I've been studying it maybe for the last few weeks. Normally when I do presentations, it's stuff that I've done presentations on hundreds of times. So I do apologize if I missed something. I'm going to try to go back and elaborate. One of the key things which you'll see on the slides, it says payroll costs include salaries of up to $100,000. Excuse me, $100,000. What that means is if you have employees whose salaries are over $100,000, you do have to cap those in your calculations, and that's $100,000 annualized. So let's just assume you have 2 employees, they make $200,000 a year each. You would have to cap each of them at $100,000, add those 2 up, and divide it by 12 to get the average monthly payroll cost that's going to be allowed for those employees. So just keep that in mind in the calculation costs. Okay, I just got a question that I think may be valuable. People are asking which email they should look for from the SBA. So the SBA email address, I would say it should come from an SBA.gov email. I think that's what the question is. I don't know the exact email address because I myself have not received it, but I do believe it should end with an @SBA.gov. Okay, let's move on here. So, okay, if you don't use the PPP funds for at least 75% payroll, if you reduce your full-time employee count, as I mentioned, to before the covered period, the other piece is you can't cut people's wages by more than 25% for people that make less than $100,000 a year. So if somebody makes, $90,000 a year, you can't cut their paychecks by more than 25% in order to qualify for full forgiveness. So if you do reduce your full-time employee count, if you cut anybody's payroll that makes less than $100,000 by 25% or more, your forgiveness is going to be reduced, and it's going to be basically a calculation. I think they're going to prorate it to reduce it by a certain percentage based on how many people you cut and how much your payroll is decreased. Now here's another big key. If you apply for the EIDL and you get the full $10,000 loan advance, the one that doesn't have to be repaid, it is going to reduce your forgivable amount through the PPP. Okay, so let me elaborate on this because this is important. Let's say, for example, you end up through the PPP qualifying for a $50,000 loan. Okay, now let's say you use the loan, all of it for the appropriate purpose. Let's assume that you use all of it for payroll. You don't cut any employees. You maintain everyone's salary the same. So you got $50,000. That full $50,000 should be fully forgiven. However, if you got the $10,000 advance through the EIDL, your forgiveness is going to be reduced by $10,000. So of that 50, only 40 of it will be forgiven. 10 will have to be repaid. So if However, um, if you get the $10,000 advance, when you apply, I believe there will be an option for you to reduce your loan by that amount. So let's say you do apply for the EIDL. You get the $10,000 loan advance. That money does not need to be repaid. And now you're in the process of applying for the PPP. During the process, I believe there's going to be a point where the lender is going to ask you, how much of a loan you want, or they'll tell you how much you qualify for, and you can specify. In the example, you qualify for 50. You should be able to specify that you only want 40 of it, and so it'll reduce your loan by 10,000 to cover the fact that you already got a loan advance, so that your full amount will still be forgivable. I believe that will be the case. So one thing that I haven't touched on yet is how do you apply for the PPP? So the PPP is not directly through the SBA. It is an SBA program, but the SBA is not the lender that's going to be handling the applications. The PPP programs are going through private lenders. So it could be the bank that you normally work with, or potentially another bank, because not all banks, unfortunately, are participating at this point. A lot of banks originally started to participate. Some backed out. Some backed out and are now saying they might get back in. I'll get into the nitty gritty of that once I get to the inside scoop portion of the slide. But just wanted to specify that this loan is taken through a lender and not the SBA. The SBA is backing it. The SBA will be the one that is paying for the forgiveness element of it. But the funds are going to be through your lender. There will be an underwriter from the lender that's going to be handling it. And so all applications are being submitted through the lenders. Okay, in terms of the Paycheck Protection Program, let's assume you take the full amount of the loan and you end up not using it for the appropriate expenses that allow you to have the loan forgiven. Let's say you have cuts, you reduce wages beyond the allowable amount. So now this is a loan. The loan is still extremely favorable, even more so, I think, than the EIDL because of the interest rate. It's a 1% interest rate. The loan terms are not as good because the loan term is only 2 years, so you can use the funds and you will be required to repay in 2 years. But again, the beauty of both of these programs is there are no upfront fees being charged by the lenders. So no points, no application fees, really no fees of any sort from the lenders upfront or even on the back end. Also, no prepayment penalty. So if you do decide you want to pay your loan back before the 2-year period, same with the EIDL. If you want to pay it back before, let's say, the 30-year period, if that's what you applied for, there are no prepayment penalties. I see some other questions here. Let me see here. Right. Okay. Yeah. So somebody asked a question about limiting the loans to $1,000 per employee. Right. Yes. So that is what. So basically, someone just asked or made a comment that they heard that the EIDL is going to be capped at $1,000 per employee, which is what I mentioned earlier in the webcast. I have heard that as well too. So as of yesterday, I was reading through the SBA website for guidance, and they have not explicitly said this on their website. And there hasn't been any additional guidance provided yet as to if this is true or not. There have been some outside sources that have reported this. So I can't say for certain if it's true, but it may be true. So it may be that the EIDL is capped at $1,000 per employee, or if you're self-employed, just $1,000 for yourself. Okay, so Paycheck Protection Program. Let's do kind of an inside scoop outside of what information is available through the SBA website. Okay, so this program has really been a mess since it became available. One of the reasons is because I think they rolled it out a little bit too quickly and the banks were not ready for it. So the program originally, when it went live for small business owners, it was April 3rd. Most banks came out and said, we're not ready to start accepting applications. We don't have enough guidance from the SBA. And so the problem was that the banks are the ones that are making the loans. So they are using their own funds to give these loans out. The SBA will be the ones that are going to handle the repayment, meaning they'll basically pay the banks back for the amounts that are forgiven. But the initial risk is going to be on the banks. And so the banks originally said, you know what, I don't know if we want to take on these risks because we could give these loans out, and if we're not getting the proper documentation from the borrower, the SBA could turn around and say, no, this information is not enough for us to forgive the loan. You're on the hook for this. And so a lot of the banks said, you know what, we're not even going to touch this. The SBA came back, provided additional guidance, and even up until yesterday, I believe, they were still releasing new guidance. They released a frequently asked question page, which Herbert, would you mind posting the link for that in the comment section? It's a pretty nice frequently asked question page that goes over some of the ambiguities that were presented in the SBA application. So what happened was the SBA released an application, and it's not the application that you fill out and send to the SBA. It's basically an application guideline for the banks to use. So all that same information the banks have to request from you, and there were instructions included on that application. And so some of the instructions that were on the application, they conflicted with the information that was in the bill. For example, the bill specifically said that the way that you calculate average monthly payroll costs is based on the 12-month period prior to the date of the loan. So that's what the bill says. 12-month period prior to date of the loan is what you use to calculate your average monthly payroll cost. The instructions on the SBA application came out and said you use average monthly payroll costs for calendar year 2019. So there was a lot of confusion because of this conflicting information, and so a lot of the banks were going with what the application said, which was using the calendar year 2019 numbers. And so the SBA came out and said, you know what, we're going to allow either. There was ambiguity, there was conflicting information, it was wrong. So we're giving you the option to either use 12 months prior to the date of the loan. So essentially, if you're applying now, you can use either April 1st, 2019 to March 31st, 2020 to calculate average monthly payroll cost, or calendar year 2019, which is January 1, 2019 to December 31, 2019. And so I hope one of the value add items that you take away from this is that if you are applying, what I would encourage you to do is run both scenarios and see which one's larger. So if you're a business that's been growing and you had more payroll in 2020, you may benefit from using the payroll calculation that spans all the way up until March 31, 2020, as opposed to the December 31, 2019. And that's I think that's important because, again, we're talking about money that potentially doesn't need to be repaid as long as it's used appropriately. So you don't want to leave anything on the table. So another way that you can calculate average monthly payroll costs is if you're a seasonal business. So let's assume that you hire employees for a very short period of time, and you hire a lot of them for a short period of time because your business is seasonal. You can use two different dates. So you can use average monthly payroll for the period between February 15, 2019 to June 30th, 2019, or March 1st, 2019 to June 30th, 2019, and get a average monthly payroll for that. To be quite honest, I don't know how they came up with these two dates. They, to me, seem a little bit unusual because a business can have a seasonal period, like let's say the holiday season, right? If you're a retailer and um, your holiday season is November, December, January, let's say, I don't see how you would benefit from using February or March to June. But this is the guidance that was provided, and so if you are a seasonal business, I would suggest you either run the numbers using these scenarios and also run it using the 12-month period and see which one's more beneficial. So the third option is for businesses that were not operational from February 15 to June 30th, 2019. They may use the average monthly payroll cost for January 1, 2020 to February 29, 2020. So basically the months of January and February of 2020 may be used to come up with your average monthly payroll costs. So the key here is that you were not in business the period from February 15, 2019 to June 30th, 2019. And so that one is a little bit, you don't really have many options with that one. You are just strictly restricted to using January and February. Okay, let me also touch on, let me see here. Okay, so for PPP, we talked about this, what's included in monthly payroll costs. This is a good page because it's somewhat in detail. So for those of you taking notes, I'm going to leave this page up here. I did talk about most of these. I'm going to see if there's anything in there that I didn't touch on. So employee benefits are included. We talked about that. So vacation pay, paternal pay, family leave, medical or sick leave, allowance for separation or dismissal, payments required for the provisions of group health care benefits, including insurance premiums, payment of any retirement benefits. We talked about that. And then the state and local tax one is the one that I mentioned. So that is the employer pay portion of state and local taxes paid. So if you're in California, it's California UI, so California Unemployment Insurance, and California ETT, which is California Employment Training Tax. And so, okay, let me also mention this. For the sole proprietors and independent contractors, it can be, as I mentioned, your net earnings. So if you don't have wages, commissions, it can be your net earnings from self-employment income, but that is also capped at $100,000. So if you are self-employed and you make over $100,000, you just cap it at 100, divide that by 12, and that's going to be your average monthly payroll cost that you can use for your calculation. One thing that I think also I should mention is the 100,000 that's being capped per employee does not include the costs of benefits. So that's annualized for compensation that they receive. So for monetary compensation, it's capped at 100,000. But if you also pay for their health insurance, you can include those premiums still above and beyond the 100,000. Okay, so it's monetary compensation that's capped. So sick pay is actual monetary compensation. Vacation pay is monetary compensation. So those are still going to be included in the 100K cap. But any benefits that you pay separately for that is not monetary compensation to them can still be added to your calculation. Okay, so the application process. So the application process really varies from lender to lender. We've helped several people apply through different lenders, and most of them are doing online applications. So essentially what a lot of the banks have done is create an online portal where you apply online. They've taken the information off of the SBA application and created an online form for you to fill out. Some banks are requesting the SBA application to be completed and either attached to an email or uploaded through one of their online portals. And then in terms of what information is requested, you do have to provide supporting documentation. So for payroll costs, this includes either the quarterly 941 forms or the annual 940. So that's a federal payroll tax form. You will also need to provide documentation to justify anything else that you are including in your average monthly payroll cost calculation. So for example, if you're paying for health insurance premiums for your employees, you'll need to provide documentation to prove that. If you're paying for, if you're doing any type of retirement contributions, you'll need to provide additional documents to justify that as well. For sole proprietors, they have not specified what they're looking for. One potential option that I think may be used is putting together a profit and loss statement for the 12-month period that you're going to use to apply, and then also supplying bank statements as a source of proof for the numbers that are in your P&L. Let me just quickly, I see question, let me see, what does it say here? Someone asked if they can apply for both unemployment benefits and PPP. Okay, so I am going to get to that. So the unemployment is the last piece that I'm going to talk about, and I'll talk about whether you can apply for unemployment and PPP and the EIDL. So give me a moment and I'll touch on that. So continuing with the PPP, when will I get my funds? So this is the big unknown. Once you submit an application, the times are going to, I think, drastically vary in terms of when the lender is going to get back to you. It's really a little bit chaotic right now. There are so many people applying that the banks, I think, are just not very well prepared. And so you may apply and not hear back for several days, maybe even several weeks. What we're doing is encouraging people to apply somewhat as soon as possible for a couple of reasons. Number one, because a lot of these lenders are saying it's first come, first serve. But second of all, there is a cap as to how much funds are available for these programs. In fact, there's already talks that there isn't enough money to give funds to everyone that's applying. So they're asking for additional funds from the government, which may or may not happen. So we do think that the sooner you apply, the better. Obviously, you do want to put a solid application in. So I wouldn't rush and put information that would delay the loan process. I have heard some banks saying that if you apply and your information is incomplete, that they'll look at your application and basically send you a request for additional information, but then put your application at the bottom of the pile again. So you don't want to send a bad application in or an incomplete one. But you do want to send an application, a complete one, as soon as possible. In terms of when you get your funds, again, we don't know. That is a huge unknown. I actually have not heard of anyone getting their funding yet. None of our clients have. In the group that we have with other accountants who are kind of sharing the information as it comes along, there are some people that have talked directly to lenders and are in the process of getting the funds approved. So I have heard of fund approvals, but not actual fund disbursements yet, which makes sense because really up until a few days ago, some of these banks weren't even taking applications. So I really think that we're going to start seeing a lot more information about what's the turnaround time, how quickly are people getting funded, probably in the next week or so. Now, the other thing, so in terms of the calculations, once you send all your calculations and supporting documents, there is going to be a lender who is going to assign an underwriter to really review everything and make sure everything looks clean and legitimate, right? I think that the presentation of this information may be important in terms of getting your loan approved quicker rather than taking a long time for them to really clear things up. So one of the things that, if you do decide to work with us on this, we will be helping select clients with the application process. Get in touch with us if you're interested. There is a form on the Mehdiani.com/COVID-19-funds page. Herbert, maybe you can drop a link. It's actually, if a lot of you are viewing this webcast on that page, if you're not viewing it through Facebook, it's below this video. If you're on our page, if you're on Facebook, I'll have Herbert leave a link so that you can go there, fill out the inquiry form, let us know that you're interested in working with us, and we'll have someone reach out to you on next steps for that. But going back to the clean application, what may happen is you'll have an underwriter get in touch with you to clarify a lot of these items. So the cleaner the application, the better. Now the second phase of it is going to be when you get the funds. So let's fast forward. You've applied, you've been accepted for the PPP funds, you've received the funds, you've now used the funds for the appropriate purposes to have it forgiven. Based on the guidance that we have right now, you do have to apply for forgiveness. So there is a whole separate process where you need to go back to the bank and probably provide additional documents supporting the fact that you've used it for the appropriate purposes to have the funds forgiven. We don't know what that process looks like right now. There are no forms, no real details provided to us on it, but we do know that there is going to be a process for that. Okay, let's talk about, so we did talk about lender confusion. So which lenders are accepting applications? So basically the SBA approved, so it has to be an SBA approved lender, but this doesn't mean that all SBA approved lenders are accepting applications. Most banks are only accepting applications from their own clients, okay? So you would want to first check with your own bank, see what their rules are. I did hear, for example, Bank of America, even if you have a business checking account with them, and I don't know if this has changed, this is from a few days ago, but if you bank with the Bank of America, but you don't have any type of credit account with them, that could mean a credit card or some type of loan account, that they would not accept an application from you. So even if you had a business checking account, you may not be able to apply through them. And so, I've had people reach out to me and say, this is the only bank I work with. I've looked at other banks and they're only accepting applications from their own clients. What do I do? And the other issue is some banks aren't even participating. So Wells Fargo came out originally and said, all right, we're accepting applications. People applied. Then a few days later, they came out and said, you know what, we've reached our cap. We're not going to take any more applications. And so I did hear that they may reopen it, but if they don't, what do you do if that's the only bank you work with? And so what my team and I have been doing, we've been trying to procure a list of lenders that will work with non-clients. We're working on that list still. It's not complete. We have a few that we believe may be good options. Some of these lenders, they don't have specific information that says, we're working only with clients. And so we're not certain if that means they'll accept non-clients or not, but we are working on procuring a nice list. So if you do come across issues with your own bank, or you're just having difficulty applying through your own bank, get in touch with us. That's something we may be able to help with. Will funds run out and when? Okay, yeah, so we don't know when the funds are going to run out. Like I mentioned, there is a cap. The government has allotted a certain amount of money. We don't know when it's going to run out. I mean, I'm assuming based on what I'm hearing that it will run out. So again, I think right now time is of the essence to get good, clean applications in. And honestly, if your bank is giving you a hard time, I would probably suggest finding another lender that may work a little bit more quickly with you in getting the application through. Additional funds being provided. So that's what I was saying. So there, from what I've read, there are already demands being made for additional funds to become available. Whether that's going to happen or not, we don't know. But that tells me two things. One, it tells me that they're probably going to run out if they're already requesting for more funds. The other piece that it tells, what else it's telling me is that there is hope for people that don't get funding for there to be a potential second round. Okay. All right. Let's talk about EIDL or PPP. All right. So taxation. Let's talk about the taxation of these funds. So the bill, and what I've done here is I actually took a little snippet from the actual bill. For the PPP, there is a section that talks about taxability, and it specifically says that the forgiven loan shall not be included in gross income, or says shall be excluded from gross income. So this is basically saying that if you receive funds from the PPP program and that amount is forgiven, that you don't need to include it as income, right? Meaning essentially non-taxable. The EIDL doesn't have any mention of the taxability. So I've read through the bill. The EIDL just doesn't even have a section called taxability, or even address the fact that it'll be taxable or not. So at the moment, strictly from a tax standpoint, it does sound like the PPP could potentially be more favorable from a tax standpoint. So using the example that I mentioned, if you qualify for $50,000 through the PPP, but you've gotten the $10,000 from the EIDL, potentially the EIDL 10,000 may be taxable, but the 50,000 through the PPP would not be. And so again, huge unknown, but just purely based on the information we have, that 50,000, getting the full 50,000 from the PPP could be more beneficial, because we are getting direct information from the bill that says none of that is going to be taxable as income, right? Whereas if you take 10 from the EIDL and 40 from the PPP, the 40 won't be taxable, but the 10,000 may be. Now, this isn't to say that additional guidance may come out later and say that the EIDL is not taxable. That may happen. To me, it would make sense for them to do something like that. Just because it does seem somewhat unfair that they're making you reduce the $10,000 from the PPP amount, but then they end up taxing you on it. Doesn't seem like a fair balance. But at this stage, because we don't have any more information about it, this is what it looks like. So what does that mean? So does that mean you should forget about the EIDL and just apply for the PPP because of the taxability? I think it depends. The EIDL application is easier. It's directly through the SBA, and the funds may be available more quickly. So if you are, let's assume that you are going to qualify for the full $10,000, but through the PPP program, you run the numbers and your PPP loan amount isn't going to be more than $10,000. It may be easier to just apply for the EIDL. The PPP is going to require a lot more information. You're going to have to submit supporting documents, which you likely will not for the EIDL grant portion, for that $10,000 portion. So it might still make sense, even though there's a potential that it might be taxed, to still apply for the EIDL over the PPP. Honestly, in terms of what I would suggest is to apply for both, only because you don't know if they're going to get to your application before the funds run out in either scenario. And I believe that even if you apply, there is going to be a point where you can turn either the EIDL down or the PPP. So I think the best case scenario would probably be to apply for both, and then when you get to the point of whether you want to accept the funds or not, let's assume you apply for PPP and EIDL, and for whatever reason the EIDL takes much longer to get back to you. You may get a response on the PPP first, right? So if the PPP comes back to you and says, all right, you've qualified for, again, I'm going to use an example, $50,000. You may just take the full 50 from the PPP, and then if EIDL later comes back to you and says, okay, you've qualified for the $10,000 grant, you should, at least what I believe is, you should have the ability to say, hey, you know what, we don't, I don't want to take the $10,000 grant anymore at this time. So I would, what my gut is telling me is apply for both. Again, it's open to interpretation for now in terms of taxability. So I don't know if I would fully rely on that for making a decision. But I did want to bring it up because I do think it's a piece that is somewhat interesting that wasn't addressed and does have financial impact. Again, EIDL or PPP availability. You got to jump through some more hoops for the PPP, but going to the amount for a lot of people could be a lot larger for the PPP than the EIDL, because the EIDL is going to be capped at 10,000. And again, if the rumors are true that it's going to be 1,000 per employee or 1,000 if you're just self-employed, then the PPP could be significantly more. So again, which one you should apply for? I would say definitely apply for the one that's larger. If you just don't have the time or don't want to go through the application process for both, that would, my way of looking at it, I would say, all right, which one's going to give me more? I'm going to go for that one first if I want to, spend any time or energy on anything. Ease of applying, as I mentioned, the EIDL is going to be, I think, much easier to apply for. They're not requesting for any supporting documentations up front. The PPP, they are. You do have to actually calculate numbers for the PPP. As of right now, it's up to you to tell them what your average monthly payroll costs are. It's not something that is going to be done by the lenders. I mean, they will do it once it gets into the hands of the underwriter, but it's going to be up to you to initially provide that information and do the calculation, and then the underwriter's job is going to be to verify it. With the EIDL, no calculations. They are going to ask for your, I believe, gross revenue, cost of goods sold, and a few other items that are optional if they apply to your business. But the key items are pretty simple to input and apply for the EIDL. And I do see some additional questions coming in. Let me just quickly scan these. People have shown interest in a list of lenders that may assist with the PPP as their banks unable to help. Okay, yeah, so I mentioned, if their banks are unable to help, we're working on procuring a list. We do have a couple. Again, we don't know if any of these lenders have actually funded. We just know that they may be taking non-clients, so get in touch with us about that. And then asked if the employer portion of the 401k contributions can be included in the calculation. Yes. So if you have a business and you're on payroll, and you're making contributions to your own retirement account, so if you have a 401k account and you're making contributions to your own 401k, that should be allowable in the calculation. So yes, for the and that's for the PPP specifically that I'm talking about. So your own portion of the 401k contributions are allowed. Same with if you're paying for your own health insurance premiums through a group policy through the business. So if you're paying for health insurance premiums for yourself, if you have a business but it's not through the business, those likely will not count. But if it's through your business, your own premiums should count. Yes. Okay, somebody asked if home office expenses would be considered eligible expenses for forgiveness. That's a good question. Home office expenses. So if you're talking about, for the PPP, as long as 75% is used for wages, if the other 25% is for rent, interest, utilities, so if any of those fall under the home office expense portion of it, then they should qualify. So if you have, for your home office, any portion of utilities that are being allocated there, that should count. I don't know if you're just reimbursing yourself for home office, if that would count or not, to be quite honest. There isn't specific guidance for a lot of these things. Let me just mention for the PPP real quick, if you're going to maintain the same number of employees to qualify for forgiveness, um, I'm not certain why they're saying at least 75% has to be used for payroll. If they're saying you need to maintain the same number of employees and you can't cut anybody's salary by more than 25% if they make under 100,000, because by default you would end up spending it. It may be because if you have a lot of people making over 100,000, you can cut their wages by more than 25% and still have full forgiveness. That may be the reason. I think for most of the people that are on this webcast, if you maintain same number of employees and you don't cut salaries, wages, or commissions by more than 25%, you should be okay for the forgiveness element of it. And then somebody asked if K1 distributions count in the calculation. Great question. As of right now, we don't think they do. So if you are an S corp, it's going to be your wages that count, not the K1 portion. Now, okay, there is one huge unknown that I haven't been able to get a straight answer on, and that's if you operate as a partnership. And this is getting to be a little bit specific, but I'll briefly touch on it. If you are operating as a partnership, payroll is not a requirement if you are if the people that are working in the business are just partners. That may be looked at as self-employed income. So when applying, I would look at your K1 profits if you're a partnership, not an S corp. If you're a partnership, the K1 profits may be the amount that you can use in the application. Again, this is a little bit more specific, so if you need more information or guidance on this, reach out to us and we can have a conversation with you about it. But for S corp owners, I don't think that K1 distributions are going to be allowed. It needs to be specifically wages that you take as a W-2 employee. All right, so jumping back in, unemployment. So somebody asked about this already, but let me quickly touch on it. So unemployment is one of the other items that was included in the CARES Act. And essentially what's changed with unemployment is they've expanded unemployment to include independent contractors and self-employed individuals. This is huge because this has never been done before, at least not in the time that I've been doing this work. And so if you are independent contractor or self-employed and you just have no work, so let's assume you're an independent contractor, your clients essentially are not paying you anymore because you're not working, you can now apply for unemployment. Same with if you're self-employed and you're just not working, or if you have reduced work, you should still be able to qualify for unemployment. I don't know what the percentage, but if you're an independent contractor or self-employed and you've had a pretty significant cut in pay, you still may qualify for unemployment. I don't know the exact calculations, but if it makes sense for you to apply, and I'll talk about why I say if it makes sense, you may want to give it a shot and let unemployment department get back to you on what that amount is going to be. The second piece of what's changed with unemployment is the federal government is now adding an additional $600 per week on top of whatever you would have normally received through unemployment, which is state level. So state of California has a cap of $450 per week for unemployment benefits. So with this CARES Act, you can receive up to an additional $600 per week, which would take you up to $1,050 per week. And this will be through July 31. Now, question of whether you should apply for unemployment and or EIDL, unemployment and or PPP. So EIDL, I believe that you can still apply for and get, even if you go on unemployment. I believe it should be okay with EIDL. I haven't seen any specific guidance saying otherwise. And the reason that I say that is because EIDL will let you use the funds for expenses outside of payroll. And so the fact that you can, cover other debts, and if you are still trying to pay for, let's say, office rent that you have, you can apply for EIDL and use it to cover your rent during the period that you're not working. And so, still receiving unemployment compensation makes sense to me in that scenario. PPP, however, is the one that's a little bit unclear, but to me, the PPP, the whole idea of PPP is for you to maintain your payroll, right? And even if you're self-employed, to maintain compensation for yourself. And so unemployment seems a little bit counterintuitive if you're supposed to keep your payroll at a certain level. If you apply for the PPP and you get it, and you apply for unemployment. So again, there isn't like a clear piece in the bill that I've seen that says you can't do both, but I do believe you will potentially run into issues if you apply for unemployment and you get the PPP, because again, the PPP, the whole idea of that program is to prevent people from being unemployed. Okay? So, I'm a little bit more comfortable with applying for EIDL and unemployment. PPP, I'm a little bit more. I don't. To me, it doesn't make sense. Okay, that's not to say that they won't come out and say no, it's completely fine. But to me, at the moment, it doesn't make sense. Again, only because the PPP whole idea is Paycheck Protection Program. Let's prevent employers from laying people off by giving them funds to pay their employees. And so if you are also an employee of your business or even self-employed, for you to go on unemployment defeats the purpose of the PPP. So okay, and then the next piece is, so let's say with the PPP you can't do both, or you're on the conservative side like me and say, you know what, you're right, that makes sense, I'm not going to apply for both. So which one should I apply for? This one goes back to running the numbers. In my eyes, if your business is not operational, so if you've had to close down your doors, you're not, making any money, or there's no money coming in, or it's been cut significantly, unemployment is an option. Should you go for the PPP? I would run the numbers and see which one is more in your favor. For people that have employees, the PPP is probably going to make more sense, but for the self-employed individuals that are applying for PPP just for themselves, unemployment may be the better route, especially if you qualify for the full amount. We're talking about $1,050 a week all the way up until July 31. For a lot of self-employed individuals, that is probably going to amount to more money than the PPP, especially if you're self-employed. You're capped at $100,000 anyways. So I would say run the numbers and make a decision based on which one's more favorable. Again, you do have to qualify for the unemployment, meaning your business has seen a significant cut, or you're just you've closed your doors temporarily. All right. I'll get to questions now. Let me just briefly talk about how we're helping. So for the EIDL, again, this is an application that is available through the SBA. Everyone is available to apply on their own. If anyone wants us to do it for them, we'd be happy to do so. We're charging a flat fee for this. Reach out to us, fill out the contact form on the page, the Mehdiani.com/COVID-19-funds page. Fill out the inquiry form and we'll get in touch with you on next steps. For the PPP, this one is one where we're not charging fees if you want us to assist you in prepping the application. And the lender will compensate us if we're assigned as the applicant's agent. So part of the bill for the PPP is that lenders are going to be compensated by the SBA, and agents can be your accountant, lawyer. There's a few other criteria. Loan brokers can be agents as well. Us as accountants can be designated as an agent. So the lender that's getting compensated by the SBA will use those funds to also compensate us for us either referring you to them or doing any part of helping you with the application. To be upfront, the fee is a percentage that they'll be paying us. It starts at 1% for, I think, loan amounts up to, I think, 350,000. So we're not talking huge amounts, to be honest. For those of you that are going to be applying for, let's say, $100,000 loan, 1% of that would just be $1,000 that we would get. So just full disclosure, that's how that's going to work. And so, we'd be more than happy to help our clients with the PPP applications. We do ask, anyone that's on this, that's applying, if you found this information useful, if you do designate us as the agent, they will hopefully compensate us. The other unknown element is the applications don't even have a place right now. At least most of them don't have a place right now to designate an agent. So we are asking, if you do submit the application, once the lender reaches out, if you would just let them know, Mehdiani Financial Management, you can list me as the primary contact, has been, assisting you or has referred you, or just is the person that's your agent. If you list us, that would be a huge help for us. If you found any of this information useful, again, we greatly appreciate it. Also, for anyone that ends up working with us for the PPP calculations, again, because we are being compensated by the lender and the percentage is small, we'll do as many of the calculations as we can. I don't think we're going to be able to do it for everyone, but reach out to us and we'll let you know what we can do. Our goal here is to try to help, but we don't have an exact idea of how many people are going to be getting in touch with us. And so reach out and we'll let you know. Hey guys. Sorry guys, I am working from home, so slight interruption. Hi honey. Okay. Yeah, working from, I'm sure everyone can relate. We do have
Daddy.
Yes honey, hi.
Can I tell you something?
You can for a second, but I am presenting to a lot of people right now.
This is a little scratch.
Yeah, okay. It is, I see that, you're right. Okay, give me a few minutes. I'm almost wrapped up with this, and then we get to spend time together. Okay? It smells beautiful. Cool.
You know what it is?
Yeah.
The meat from the pot, that was so good.
Delicious. Okay, I'll be with you in a few minutes, honey. Almost wrapped up. Love you. Okay, give me a few minutes. Almost wrapped up. All right, guys. So let's get to questions. Herbert, I know you've been pinging me with some. If there's anything else that's come through, I'd be happy to stay on the line and answer more questions. I know Herbert's been probably doing a good job of answering questions in the chat. Let me see if I can actually jump on and take a look as well. I see some comments coming in. Yeah, she's our PPP specialist for sure. Okay, I do see a question here. People have asked how to apply for unemployment benefits itself. Okay, great question. So the question is, how do you apply for unemployment if you're self-employed? The EDD doesn't have clear guidance on it. Okay, so yes, the EDD, so if you're in California, you're going to apply for unemployment through the EDD. The EDD is not, they haven't updated their application. So if you're self-employed and you try to apply, it's going to ask you who your employer is, who your last employer is. And so right now we don't have clear guidance as to what that means in terms of what information you should put in there. To me, it makes the most sense to put yourself as the employer, and you as the employee if you're self-employed. So again, the EDD should be coming out with more guidance hopefully soon, but at the moment, or at least last I checked, you are going to need to put who your previous employer was. So right now, the best I can do is tell you to put yourself as the employer. Yeah, and then I would also keep checking back on the EDD website for updates. One of the other things that I would suggest, so if you are a client of ours, you should already be on our mailing list or email list. If you're not a client, we will be sending out information that we find to be important and relevant. Not often, but often enough where it makes sense. We try not to bombard people with too many emails. So if you do want to apply for our newsletter, there should be a input field at the bottom of our website. Again, we don't spam people. Our system is really just to relay information when we feel it's valuable. Okay, somebody, let me see. I'm looking. Some independent contractors also need more clarity on how the PPP loan would be calculated for them. Okay, sure. So independent contractors, if you're an independent contractor, it should be based on your net earnings. So basically, income minus all your expenses. So if you're an independent contractor and you file a Schedule C, essentially it would be the net profit portion of your Schedule C. If you use calendar year 2019, you may be able to use your Schedule C as supporting documentation. If you haven't filed your tax return yet, putting together a P&L and providing bank statements, I think, would be a good alternative. But yeah, I would say use net profit, cap it at 100,000, divide it by 12, and that's what your average monthly payroll piece should be, or payroll cost should be. Let me look here. I do see some other questions coming in. Someone also asked about rehiring employees for the PPP to be forgivable if they. Okay, so if you already let employees go, you do need to rehire them prior to June 30th and before the 8-week period after you get the loan. So the 8-week period that you have, so once you get the loan, for an 8-week period, you need to maintain the employees that you had previous to letting them go. And so if you've already let employees go, you do need to meet the full-time employee count. And full-time employee count is basically, if you have 2 part-time employees, those 2 would equal 1 full-time employee. And so you do need to maintain that count. So if you did let people go and they already found other jobs, you will need to replace them. Let me see what else we have here. How do you get the list of lenders you're putting together, Katie? So we're crowdsourcing the information. We have a group of other accountants that are doing the same thing we are essentially, and we're sharing the information with one another. So people that have found lenders, and we're procuring our list, just reaching out to lenders. Other accountants are doing the same thing, and so it's crowdsourced information at this point. Let's see what else. If you have mixed income W-2s and 1099s, should we apply without W-2 income on EDD for now? So Megan, you're talking about applying, you said EDD, so I'm assuming you're referring to applying for unemployment. If you have mixed W-2 and 1099 income, I would put both just to maximize what you can get from unemployment, because unemployment is based on a calculation. The max is the 450, and the additional 600 is a max of additional 600. So if you have mixed income and you're applying for unemployment, I would probably suggest adding both, just so you can qualify for the most amount. And I'm sorry, I do see a bunch coming in. I'm gonna try to answer as much. Herbert, if I miss anything, if you wouldn't mind just sending it to me directly, I'll answer it. If I want to apply for more than just what covers my rent, payroll, utilities, can I request more in a loan? Okay, so for the PPP, you're capped at 2.5 times payroll, with a maximum of 10 million. So again, most people that are on this webcast, I think, are not going to exceed the 10 million. But so 2.5 times payroll. You can't apply for anything more than that for the PPP. For the EIDL, you can apply for up to 2 million, which is just a traditional loan, and it can be for more than payroll. It can be to cover any other expenses. Oh, Katie said, how do you get that list from? So, okay, Katie, we're not. So the list is something internal that we're still working on, and it's not even. Quite honestly, it's not solid because the lenders aren't even. We're reaching out to them, and we're not getting solid answers. We can't even get a hold of most of these lenders right now. But as we're finding success with lenders, we're sharing it with clients that reach out to us. So if you do need some recommendations for lenders to reach out to that are working with non-clients, reach out to us, and whoever we have at the time, because that list is constantly changing. So originally we had some lenders that said they were working with non-clients, and they came back a day later and said, due to the high demand, we're only working with clients now. So that list is constantly changing. Megan said, I meant just W-2. So Megan, I was saying for you, so if you have both 1099 and W-2, I would do the W-2, which is your employer, put their information in. Oh, I see what you're saying. I would do whichever one's larger. So even though it's not set up for 1099 yet, if you make more, you'll probably qualify more for that. I would do the larger one. Let's see what else we have. Jessica, when are they opening it? Is this the link where to find it? I think that's a reply to something, so I don't think that's a relevant question. Vivian saying there was no place on the UI form to include income. Will it be based on my 2018 tax filing since I haven't filed 2019? I received a form from EDD that says my wages are 0. I tried to go in and amend the claim. So yeah, the EDD right now is a mess. So I don't have a solid answer for you. I don't even know if you can go back and amend if you've already done it. But what my suggestion would be, if you are able to, submit an application, list yourself as the employer, and then in terms of wages, I don't know if it asks for a specific time period, but if it does ask for a specific time period, just do a best guess estimate of what you've made during that time period as a self-employed individual and use that number. Okay, let's see. Valerie, 2 questions. EIDL, cost of goods sold for service-based self-employed people. I put about half of my business expense. Okay, no. So cost of goods sold is not your business expenses. For service-based businesses, cost of goods sold is generally 0. So cost of goods sold includes, it's usually referring to inventory items. So for service-based businesses, you're generally not going to have cost of goods sold. So I would leave that blank for most service-based businesses. Now, there are some service-based businesses that may have a product or something that could qualify for cost of goods sold, but for most, it's going to just be 0 if you're a service-based business. And then the second question, I applied for unemployment as self-employed on March 30th, and it was rejected. My claim was eligible for 0. Looks like now PUA and separate application, TBD. Yeah, so you know what it might be? It may be something that you got to come back to on the EDD website and apply once they go live for self-employed individuals. And I'm sorry, I don't have more information on that. It's honestly just, it's chaotic right now. There isn't solid information, and I think the EDD doesn't have solid information on how to handle this either. So the Chase PPP application asking for a breakdown of how we're going to spend the total PPP. I've seen that. Yeah, I'm working with a client right now. I have seen that. How should we enter this? Is it better to so the total amount is for payroll? Okay, so at least 75% of it needs to be for payroll. So when you're filling out the application, and I know Chase specifically asked for it, I would just make sure to include at least 75% for payroll. And for the other items, you can go in and look at what you usually spend on a monthly basis and put an average in there. As long as at least 75% is for payroll. I think the reason Chase is asking for that is really for them to just be conservative in making sure their bases are covered. The SBA application itself doesn't ask that question or doesn't ask those questions. So let me give you guys a little bit more insight as to how the application process is working with the lenders. So the SBA has set up a portal where lenders have to go in and submit the information that they're collecting from the borrowers directly through the SBA and basically get an approval from the SBA. I think it's automated. I think the main thing that the SBA is looking at is that there's a valid EIN or social security number. And so I don't think that information is being relayed, the portion where Chase is asking you how much you're spending on each. I don't think that information is being relayed to the SBA. Valerie saying service-based already put. Okay, so Valerie is saying that she already applied for the EIDL and she put for cost of goods sold half of her business expenses. Can I amend after the fact and will it impact my award? Okay, I haven't seen an option to amend, and in terms of it impacting your award, I don't think it'll impact the grant portion. So the portion that's up to $10,000 where you don't have to repay it, I don't think that's going to be impacted at all because it's not, from the information I have, it's not based on your income or expenses. I think the reason that they're asking for that is if you want the $2 million or up to the $2 million loan, then your income and expenses come into play. So once the SBA reaches back out to you, and if you do want to get beyond the $10,000 grant alone, you may need to talk to them about amending that because I think that may impact what you qualify for. All right. Hey Herbert, can you give me a thumbs up if I've answered most of these questions? I'm getting a lot of thank yous. Thank you guys. Thank you guys for joining. I'm glad to hear that it was helpful. Oh, okay. So somebody asked, is it known when the unemployment applications for sold props will be possible? I don't know that. I don't have that answer. Looks like somebody posted a link for the pandemic unemployment. Not yet being set up. Scroll down to the plot. Okay, so yeah, so it looks like that they haven't provided that information yet. Thank yous again. You're welcome. Thank you guys for joining. Okay, so it looks like we've covered the questions. And again, everyone, thank you for joining. If you do have any additional questions, feel free to get in touch with us. If you would like our assistance with any of these programs, fill out that inquiry page. For those of you who have already filled it out, we'll be in touch. Brett Lacey is one of our team members. He's going to be kind of leading this whole initiative in helping our clients with these applications. So Brett will be reaching out to you. Herbert Palacios is also one of our colleagues who's helping with this entire process. I'll be involved as much as possible as well. And again, feel free to reach out with any additional questions. Again, the last thing I want to say, if you did find this to be helpful and useful when you are applying, If you do indicate us as your agent, it would help us getting compensated from the lenders, so that would be much appreciated. And then also, for those that we work with, we're not going to be charging you directly for anything as long as we are assigned as your agent. And if there's nothing else, I hope everyone is safe and healthy. Please continue to take precautions to stay safe and healthy. Hopefully we'll get through this quickly. I know it's been difficult for a lot of business owners. And it's been somewhat difficult for us too. For our clients, we do apologize for the delays in getting back to you with tax returns. We genuinely are doing our best to get everyone's returns prepared as quickly as possible. We have had to pack up our computers, phones, files. All of us are working remotely from home. As you can imagine, it's not as efficient working from home. I have 2 little kids that love to interrupt. It's extremely fun for me, but it does cause some delays. So we appreciate you guys bearing with us. If you do have any need for your return prepared more quickly, reach out to us. We'd be happy to help prioritize. If you're applying for loans or there's some circumstance that requires you to have your return more quickly, please let us know. We're doing our best to accommodate our clients as best as we can. It's a tough time for all of us, and we're staying as positive as we can, and we hope you are too. Again, thanks everyone for joining. Stay safe.